Welcome, everybody. We're thrilled to be live in Royal Palm Coast Realtor Association. Jeff White, thank you for all that you've done. You and Sharon and Beate, just tremendous help to launch. This is a great opportunity for us. For those of you just jumping on, I mentioned a couple of minutes ago as a few people were on. We're going to present today and train, but we early on, even in the first couple of days, it's very apparent this realtor leadership in the realtor group that you have is very knowledgeable in flood, and so we're as excited to learn from you as it is to present both our program and what we're doing. We have our full team on from CartoFront, as well as we have Erica Ostrander from We Insure. And so we're here to be able to support, the training and to learn. We're here today and then next Thursday, both in English. And then on the 17th, we'll be presenting this in Spanish. Our entire program is bilingual, both in communication, service, and support. Our whole goal is really to put you in a position to win. We've designed this entire program with the help of your realtor association, with the help of 3 other clients. We're also in the Miami MLS, we're in Maine Listings, Maine MLS, and Boise, Idaho MLS. This is really around helping you have the knowledge and the tools throughout the process. Up front, as you're evaluating properties on the buy side, when you get to that moment of offering a contract, understanding the total cost of ownership for that property, not just at contract offer, but the lifetime of that ownership. And then once you have contract in hand, working closely, and this is where Erica can come in, or someone that's suitable that you work with, to help you get the right insurance for your client in flood. If necessary, make sure that's smooth going to closing. Today, we really want to help you get some information so that you're the most knowledgeable, confident, profitable realtor in your market. We know that flood insurance is very specific, nuanced, complex, and we want to help you. And at the same time, FEMA's undergoing the biggest change in its entire history right now. And we want to make sure you understand all that's happening with the changes now and up and through April 1st, when all the renewals will be coming out across the entire FEMA network. Please feel free to use the chat function to ask questions as we go. I'm going to prompt everything with 4 questions in a moment, and then we'll get to all the questions one by one at the end in a Q&A session. So as we go, these are 4 questions that we want to kind of pose that will be the themes throughout our training today. First is, have you tried our CartoFront application? So just really quickly, quick yes or no in the chat would be very, very helpful. Secondarily, and this is just for the entire presentation, what information do you need regarding flood risks to advise your clients and be the most confident that you can be? So it's just a general question. Third is, when you do share information, like a quote from us or a quote that you get from an insurance professional, what questions or objections do you hear most often from your home buying client? And then lastly, how can we be better at being better for you? So what can we do with our service? And we just launched a couple of days ago, but what can we do to make it easier, simpler, better for you and more confidence building? Okay, so that little yellow book up on the top there, it's called tongue in cheek, everything you always want to know about flood insurance, but we're afraid to ask. We have an ebook that we'll be sharing with you. Edna will be sending out a whole list of information at the end of this. We also are recording this so that we have this and we can post this online for the Royal Palm Coast Realtors Association so that they can join after we're done with our training at any time at their leisure, pop some popcorn, maybe have a glass of wine and have some fun with it. But we have 4 chapters today. The first is broad about flood today. There's a lot of change going on both in the program, but also with climate and weather related events. We'll dig into doing a demo very quickly. We'll get into flood insurance specifics and then resources that are available to you, and then Q&A. We're hoping to get through the presentation part in the next 30 minutes. So chapter 1, this is really why we're in what we're doing. This map on the right is independent research overlaid against FEMA's maps. It was done by 75 scientists. It came out about a year and a half ago, and it shows unseen risk. Those dark green areas are where the FEMA maps are not showing as much risk as there really is. So 41 million properties across the US are at risk to medium to high in flood. When we look specifically at your area, you can see there is a lot of risk that's not presented in the normal FEMA models. We're going to get into this, talk a little bit about some quotes that we're seeing and educate on this, but specifically look at in Lee County, right? There's a big increase between what FEMA is seeing and this independent research from a year and a half ago. And when you look at this, the towns and the cities, Cape Coral specifically is one of the highest underrepresented risk in the country. There's 41,000 properties that are with hidden risk that weren't on FEMA's maps. That obviously is a major reason why the association has asked for us to come in and provide our free service to you. Let's talk a little bit about FEMA and Risk Rating 2.0. It's been about 5 years in the making. They have been working on this with a lot of scientists, a lot of different people. This is the biggest change that they've had in the 50 years of the program. Each state is being affected differently. And in the state of Florida, they have about 8 million FEMA policies in effect, right? And they're projecting for all renewals, about 80% of them are going to see an increase in price in this market, okay? 20% will see a decrease. And why is that? Well, Risk Rating 2.0 now is a whole new way that FEMA is pricing the risk of properties. The biggest change, the biggest fundamental change is that they're pricing each property individually. So the old days of being on a flood zone and having some sort of rate based on that flood zone is gone. In the old days, a flood zone X would be a standard price of $599. That is no longer the case anymore. Each property is being priced by individual characteristics, data, and metrics. Things like based on the elevation, distance to water, replacement costs, etc. So elevation is still important, but it's now baked into the price specifically of the FEMA flood rates. And we'll talk a little bit about that on the next slide. Nationally, 77% of the rates are going to go up, 23% are going to go down. Florida is a little bit higher on the rates going up. The government is capping the maximum rate of insurance at $12,125. Many of you might remember about 10 years ago when they tried to institute different changes called Biggert Waters. There were prices coming out of $49,000 for flood insurance. That caused then a recoil and changing the way they did it, which was done in about 2013, 2014. And now they're coming back at it with some smarter ways of capping the increases. We'll talk a little bit about that on renewals in a second. If you're on a special flood hazard, and we're going to talk a lot about that today, AE, AH, VE, you still need flood insurance for a mortgage. That is always going to be the case no matter what. You're going to need a flood insurance. Unless you're paying cash and your client's willing to take the risk, you have to have flood insurance. Important point here. If you have an existing FEMA policy on a property and it is sold, that can be transferred to the new ownership. Really critical and can be a huge savings for all involved. Okay, April 1st is coming up. So they kicked off this program on October 1st of 2021. It was for all new policies. So any new policy was priced with new Risk Rating 2.0. It was a way that the government could burn in the program, see how it goes, see how their pricing works, see how the technology works. It was the first step to change in the system. It was as much an impact on the realtors and their home buyers as it was the insurance sector that was trying to understand it just as much as you are today. April 1st is the date for all renewals. So we're about 3.5 weeks away from that. Everybody in the program is going to get repriced based on this new risk rating 2.0. And again, it's based on the individual property. So you are likely to see 80% of your clients who have FEMA policies, new and past clients, see an increase in their price. That said, the government is capping the renewal price on any 1 year at 18%. So I'll do a real simple example. So if someone did have a X zone and they took insurance for peace of mind and it was $600 and they got increased now to say $1,000, their first year is only going to be 18%. It'll be $90, right? And it'll be a $690 fee for 2022, but it will see an 18% increase every year until they get to market rate, which will be $1,000. So there'll be sticker shock, but the government is trying to, mitigate the amount of wallet problems or out-of-pocket expense for those that already have policies. And it's really, really critical. And back to the last slide, because it's transferable, huge savings to everybody. Now, community rating system is still in effect. All those communities that are participating, which your communities are, will see a 5 to 45% discount. It's already embedded in the pricing. Last but not least, and this is the biggest thing that I've already received from a couple of you realtors in the market, elevation certificates are important still, but they're being de-emphasized overall in the program. So let me say that again. Elevation certificates are now baked into the pricing. Really, really critical that you understand it. It's baked into the base price because the government is using all sorts of data to have elevation in their pricing model. That said, if you need to fight the insurance costs, you can use an elevation certificate or get a $30 report from My Flood Status, who's a partner of ours, a referral partner, and go fight it. Those are the tools that you use to beat down the costs. But the base price and the prices that we're showing already have elevation baked into the new pricing from FEMA, as well as the private side. Okay. The flood zones most likely to be seen in your area are X zones. Again, they're low to medium risk, and it's a certain percentage. Again, you're not required to have insurance, yet given all the quotes that we're seeing in your market, research is highly recommended. And we'll talk a little bit about that in a second. Anything on a flood zone, AE, AH, VE, you're required to have flood insurance for the mortgage. Okay. Well, since the program started in October, we're seeing 3 emerging types of flood quotes in our 2 markets, actually our 4 markets, but our primary Florida markets are pushing most of the quotes right now, right? So we've taken 6,500 quotes. I'm going to kind of give you what those 3 emerging trends are. The first is the flood zone, right? So, on a flood zone, AE, VE, AH, you got to take insurance. So now it's really a question of what's the best rate. Here's an example, quote number 9488 that we took some time ago, where there's a price difference between the private side and the government. And depending on what your client wants and the kind of coverage that they want, it's what's the best price, what's the best coverage. It's pretty straightforward. You need to take insurance. Now you're shopping on price and coverages, right? Private side's a lot more flexible. We'll talk about the options in a moment, but one way or another, you need flood coverage. And so this is pretty straightforward. This is a lot of quotes that we're seeing. Flood quote number 2 is on an X zone. And in this example, the X zone reads pretty consistently, where there's low risk, low to slightly medium risk for this property, 9481. It's not the standard $600 because they're seeing a little bit of risk, but between the private side and the government side, you're within about $10, $15 a month difference. And so for X zone, especially in your market, it might be peace of mind to take a good coverage for at least the base $250,000 for somewhere between $700 and $950. That might be peace of mind. We're seeing rates even lower than this for peace of mind, and it's just a better safe than sorry type of approach. We're seeing a lot of quotes here. This is the one that keeps me up at night. This is what we're calling the double take. And this is traditionally on X zones, right? And there's a lot of X zones in your market. But one of the parties, whether it's the government or the private side, is seeing risk and the other one is not. We are seeing probably 20 to 25% of all quotes falling into this category. These are the ones that are concerning because, again, old system was it's on an X zone, we don't need to take a policy. New system is somebody's seeing risk and somebody's not. And so what I'd recommend here, what we're recommending is take a double take. Do the double homework, reach this out to either Erica on our side or someone that's qualified and get more information on this. My concern is in this one is that one is pricing risk and one is not. Who are you to believe, right? And again, it's brand new system for FEMA and you know, they're working through their rating system. But and sometimes the public option in this example is more expensive than the private is. I've seen it vice versa, where the government's like at $500 and the private's like, whoa, we're gonna price it at $1,800. So do the homework, do the double take on this. We've written a paper on this. I just cut a video on this yesterday. We're going to get that out as quickly as we can. This is the one that's really the most important to be digging in and looking at further because pricing now is very accurate to individual properties. Okay, that all said, let me move over really quickly. And I don't have the benefit of seeing how many people have taken quotes, but we're seeing a lot of quotes right now in our system, which is great. I'm going to take a real quick quote here. And thanks to the Royal Palm team, we are located in two different places. We're right next to each listing, right here, very convenient. We're also, when you go in, right down here, underneath some of the other opportunities to get information. So I'm going to take a quote right here and let's see how we go. This is a live quote. Sending the data out. Okay, so the way it works is we take the data, instantaneously clean it and send it off to the government, send it off to the private insurer who's Beyond Floods, who's part of National General Insurance, who's owned by Allstate. And when we get the information as it comes back, we start populating the page. So the first thing that you noticed as it was populating is you saw the price, you saw the address, and you found out exactly what flood zone it's on. So right here, we're telling you exactly what flood zone it's on, so you know, and underneath it is information. We call this a hover over. Underneath it is a definition of what each and every zone is, okay? Underneath it then is the pricing. And the first two prices are what we call standard. And this is based on how the government prices their regular insurance. So the base building is $250, that's their standard. And they price $100,000 for the property itself, the contents of the property. Their deductible is $1,250. So we're showing exactly what the standard is for the government. This is coming in this property, $527, right? We're matching it now by the private side, okay? The private side now matches it exactly, and we're reading it exactly the same way. So it's comparative apples to apples. In this regard, they're coming in about $120 less per month. Okay, it's the lowest price. It's indicated by this little thing. Enhanced shows that the private side could go all the way up to $1.5 million in insurance coverage if you choose to, right? So what we've done is we've set the standard at $300,000 with $100,000 for property and the same deductible $3,000, just to give you an idea of what the difference would be if you start to stair step up and get an actual replacement cost. In this regard, it would be a little bit more comparative to where the standard is from the government, but it's not enough to cover full replacement cost for this property. Full replacement cost would be about 80% of this, which would be, I'll call it roughly $500,000. So you'd need a couple $100,000 more of insurance, which would be reflected in the price here. At any point, if you have questions about the insurance, you click here. Erica's available. You put your name in, your telephone number, a quick message, click it off to her, and her team will be able to get back to you. Other options would be to share it with your client. And we've made it convenient for you to share in 3 different ways. You can download a PDF. Here's the PDF. There we go. It's coming up on the screen now. So the PDF is just a simple form that shows the difference of prices and what the coverages are between the private enhanced, and the public option. And then what you do is we drop your name in here on each form. We have our disclaimer down here that these are directional estimated quotes and that they need to be bound by a licensed insurance person. We give you Erica's information if that's of ease to you. And then you can use this for a showing or open house, whatever you'd like to do. The other ways, oh, sorry about this, kind of lost in my hair. The other way is you can click a link, drop it into an email or a text. They'll get a direct link back into this. Or you could send off an email to your client. I'll send one off to my own address. Hit send and off it goes. On the back side, this is what your client would receive. We're powering the system. We're introducing We Insure because it's now an insurance quote that they're going to receive. We stack the information so they can see it, make Erica available, or they can come right back into the quote through this private link. The final nice feature that we offer is we're completely bilingual. So if your clients are Spanish speaking, all they have to do is flip it to Spanish and the entire system turns back to Spanish, including all the communication of the PDF or the email that comes out on the back end. Okay. Let's get into the next bit of information here, Flood Insurance 101. And again, we are really appreciative of the knowledge base in your community regarding flood insurance. So this is really super helpful. There's a technical definition of what's considered a flood, and it's necessary for the insurance side. So a flood is defined as excess of water on land that is normally dry, affecting 2 or more acres of land or 2 or more properties. So if you leave a sprinkler on in your backyard, it's not a flood. But floods are multiple properties that get impacted at one time, and it can be caused by a variety of things. So in our market, it's hurricanes or dramatic storms. In the northern part of the country, it could be snow, right, or ice. And it's also affected by, inadequate drainage systems, dams, or levees backing up, right? So with a tremendous amount of growth and expansion and building and old infrastructure across the United States, that's a major reason why we're seeing as much flooding as we are in the modern days. Important to note what's not a flood. So a flood is not considered to be covered if it's a result of something that's internal to the property, right? A pipe breaking in a kitchen, a hole in the roof, a broken window, those are all internal. That would all be covered by homeowners. So what is flood insurance? So again, the definition is flood insurance protects your property in the event of a flood or flood-related disaster, right? It's its own separate policy, and this is critical. A lot of people around the country think, oh, flood insurance is covered by homeowners. Not correct. It's its own separate policy and must be purchased separately through a qualified insurance agent. On our platform, and you just saw it, we offer 2 types of insurance. We offer the government, FEMA. We're directly right into FEMA's quoting engine. And then we're offering a private option through Beyond Floods. And again, Beyond Floods is part of the Allstate family. It's rated A- by AM Best & Company. A note here, we got an inquiry today about additional resources showing more quotes. We are definitely open to that, but that is something that Jeff and the team at the association would need to recommend based on a groundswell of realtors asking for additional quotes on our platform. It's something we can't push But if you have interest, we certainly can meet that request. You will see quotes for single family homes, townhomes, condos, mobile homes. What you won't see quotes directly in our quick quoting platform is when it has to do with land, build-to-suits, commercial. Now, in those regards, you'll get rerouted to Erica, and Erica can do that manually for you or a member of her team, but it's a manual process. She'll be able to access that for you and provide that to you. It just won't be within seconds on our platform. Okay, let's go side by side here between FEMA and Beyond Floods, just so you understand. When you take insurance from FEMA, you're taking it directly from the government. They back it. They are the servicer of it, and you're working directly with the government on that. When you go to the private market, whether it's Beyond Floods or Neptune or anybody else, that is insurance directly with that carrier, and they have reinsurance, and you're dealing directly with the carrier. With the new risk rating 2.0, when you look at the pricing model and the approach now is on par. They're basically both using a tremendous amount of data, elevation, closeness to water, catastrophe models, et cetera, to derive their pricing model. Now, that said, the government has their own view of the pricing model and their own secret sauce. And each and every private insurer, Beyond Floods, Neptune, Aon, Lloyd's, everybody on the private side has their own metrics and has their own special sauce. So pricing is going to be different. The methodology is the same now. Now, the limits in this page, these are all completely different. So the government, I said this a moment ago, one size fits all, whether you're in Fort Myers or Fort Bragg, it's all the same. It's $250, $100, and they're going to give you deductibles of $1,250, $1,250, one on each of the policies, the building and the personal property. Very limited options beyond that. It's kind of one size fits all. You can have any color car as long as it's black, the old Ford adage. No flexibility. It's the same around the country. It's standard. On the private side, whether it's Beyond Floods or anybody else, much more flexibility. The limits are much higher. The ability to get coverage for the personal property much higher. Deductibles much more flexible. Loss of use coverage, other buildings coverage, all can be, rolled into this. Again, talk to Erica about specifics on that or someone qualified that you work with. Same with waiting period. The government, it's 30 days. Private, it's 5 days. Now, what's different or what's the same is if it's required by a lender on either side, all you have to do is present that information from the lender, and these waiting periods are over. So if you have a closing in 2 days, you can get that waived, and you can get the insurance bound. Now, historically, it was always best to use the government for the highest risk because they subsidized the insurance. Those days are quickly changing and will be over shortly, right? With the renewal period coming, with risk rating 2.0, the government is pricing accurately to their model. So our service is completely free to you. Take the free quote, do the homework, look at the government, look at private, compare shop, and make sure whether it's low risk, medium risk, high risk, flood zone or not, you're getting the best rates, the best options for your clients. So what does flood insurance cover? The building coverage is the physical structure itself, the foundation, anything that's permanent, right? So the electrical and plumbing systems, central air equipment, furnaces, water heaters, refrigerators, stoves, built-in appliances, etc. Things like detached garages and or other buildings that might be on a property like a shed or something, it would be covered, but you need to double check. It's covered on the private side in many instances with National General, but on the government side, you're going to need to double check if you need additional coverage. Debris removal in the event of a storm would be covered. Okay. For contents, it's all the personal belongings that would be, kind of in the property itself. So the clothing, the furniture, the electronics, anything that can be taken out. Erica likes to say, turn a building upside down, anything you shake and it comes out. Those are things that are the contents, right? So that all is covered with a flood policy. What is not covered is things that are prior damage, like moisture, mildew, mold, not related or caused by this specific flood or weather event, right? Things like currency or precious metals, valuable paper, stock certificates, those are not covered. Property and belongings outside of the insured building, things like trees on the property, plants, wells, septic tanks, walks, decks, patios, fences, walls, seawalls, hot tubs, swimming pools, those aren't covered unless you go and get coverage specifically to outline those things in a rider, right? Financial losses caused by business interruption, loss of use aren't traditionally covered unless, again, you specify it in your flood insurance policy. And landscape or exterior features, again, not covered by flood insurance in a typical policy. And again, most all of this is not covered by the government in their standard policy. They're just covering the building and the property contents. Now, in the event that you or a client does have a claim, we wanted you to make sure you understood a couple of key concepts. One is replacement cash value. So replacement cash value is the cost to repair or replace an insured property. So if the property is your primary residence, this is the example, both the building and the contents would be recovered by the replacement cost value. Now, what's actual cost value? So actual cost value is the replacement cost minus the value of depreciation for wear or tear. And this is really used mostly for investment properties. So let's give an example here. If you have an investment property, say on Sanibel, and you outfit it 5 years ago in the living room, and the living room gets damaged, but the it's $5,000 of damage, and you had spent $10,000, right, for all that stuff, but it's depreciated now a substantial amount. You're going to get the original price minus the depreciation, right? That's all that's going to be covered in the actual cash value. So again, in the event this happens, these are a couple of key terms that are important that you know going into it. Last section here, and then we'll turn it over to the questions. I see there's a lot going on in the chat. So flood resources. So we have a landing page that's accessible to you. All the information is in this one place. Edna will send out that link. And all the information that you're seeing here is on that, blog articles, all sorts of things. So very handy. I mentioned the ebook. We're going to send you the links to these both in English and Spanish. It's really easy. It's 8 pages. It's kind of a consolidation of what we're teaching today. It's great to send that link onto a client. Really helpful to start the conversation when you're working with them. Embedded in all of this are these links, FEMA's information, which is always being updated, the Florida State report, and then links to some of the people that we've mentioned today. Going forward, if you have any questions on technology or education, feel free to reach us at info@cartofront.com. And then specifically, regarding anything related to insurance, Erica is always available. Here's her information. We'll make that available as we follow up today with you as well. So we have 25 minutes left. Love to just get a dialogue going about kind of where you're at, what you need, how we can be a better service to you. What I'd like to do is turn it over to Edna to kind of manage the Q&A. Jeff Fearberg, Jeff, if you can wave. Jeff Fearberg's on our team. He's our product manager. Jeff worked at Corporate Remax in Denver for many years. So if you're a Remax, you might know Jeff. Jeff's been in and around real estate for a decade and has helped us craft this program. He's a bridge between the insurance team that we work with and the real estate side. And so Jeff will be able to help answer some of these questions along with me and other members of our team. Henry McDonald's on. Henry, wave. He's our tech full stack developer. Fran Lightbound's on our team. Fran, say hello. Communications. And then Edna, because she's our customer success manager on training. So with that, Ed, please take it away and we'll go from there.
All right, sounds good. So I'm going to go in chronological order that we received the questions. And the first one was, our quotes are only available for a property already listed on the MLS?
Okay, so great question. So we are in development, and Henry can talk about this in a moment. that will allow you to put in any address and take a quote. So Henry, you want to talk a little bit about that and the timing that will integrate that with Jeff and Royal Palm?
Yeah, yeah, happy to talk about that. So we've got a feature in development, like Jason says, that will take a quote based on any address in the U.S., at least when it works. And as for timelines, I think we'd probably have to talk between Jeff White and our team, Jason. I don't know if we have any concrete timelines, but I think probably in the next couple of months is when something like that would roll out if we are able to get it done in that timeframe.
In the meantime, if you need help, just reach out to the info line or reach out to Erica and we'll be able to help you get that going.
Thank you. And I saw that Erica shared her contact information, but I will also include it in the follow-up email I'll be sending after this. So the next question we had is, and Jason, I think is when you were going through what policies cover, and it says, are you saying that the insurance company will make the final determination of premium regardless of the flood zone, even if it's an X?
So yes, so let's talk about that for a second. This is a great question. So FEMA has everything's been based on historically on the FEMA flood zones. With advancement in technology over the last couple of decades, the private side has historically used all sorts of data to price the risk based on their own models. And now FEMA is catching up with this new risk rating 2.0. So just like elevation is baked into the FEMA model, so too is the flood zones, but they're de-emphasizing both pieces, right? Because FEMA has historically been challenged to keep their maps up to date because climate has changed so rapidly in the last several years that their maps are out of date as soon as they make them. So the final determination of all of this. So we give directional estimated quotes that are done obviously within seconds. This is a convenience to you to look at total cost of ownership for the properties. The bindable quote is based on working with either Erica or an insurance person that needs additional information from your client to bind that directional quote down to what's bindable, right? And so whether it's the government or whether it's National General or any private insurance company, all of those factors are going to be baked in right into the quoting engine that they use. So flood zone is a determination, elevation's a determination, but it's now not just those two things. It's like 100 different data sets that go into their quoting engines. And whoever asked that question, I want to make sure I addressed it enough sufficiently. So if you want to take off mute, just let me.
Yes, you did, but I still have another question, if I may.
Absolutely, Janice.
If a buyer is financing and the property is showing in one of those flood zones, the lender is going to assume that flood insurance is required.
Yes.
But if it's showing as being in an X, then we normally will say when the buyer's looking to, whether they can afford the house, they're going to get an FHA loan or whatever, they're not going to have flood insurance if it's in an X. But now what I hear you saying, and correct me if I'm wrong, is that they may in fact have to have insurance. And who and how would I?
Yeah,
I have to get an insurance quote anyway, even though it's an X.
So let's take those in a couple pieces. So let's start with the fundamental piece is if it's on an X zone, right? It's not a flood zone. That is still consistent. So the lender will not require a flood insurance, right?
Okay.
So I want to be super clear about that, right? And I may have confused you with the three types of quotes that we're seeing. Okay. So let me just restate that again. If you're on a flood zone, AE, AH, VE, yeah, you need insurance. You cannot get a mortgage without having insurance. That is not changing ever.
Right. Okay.
Right? Okay. If it's on an X zone, right, buyer beware, right? That's really what I'm saying, especially in your market, because we have seen, like Ida last year, Ida did did a lot of damage in Louisiana, but where it really did damage is when it sat over New Jersey and New York for like a day and flooded everybody out there. Most of those properties were X zones. So what I'm saying, and again, I've been in your market 2 or 3 times now in the last 6 weeks. As I look around your market, there's a lot of X zones, yet, you know, you've got high risk. And what's happening now is again, the reason why they're moving away from the old model to the new model is, in the old days, you and I, Janice, could have been across the street from each other. You could have been in an X zone, I could have been in an AE zone.
Right.
But water doesn't care. Water's going to find you, right? So they're using technology now to price what the actual risk is. So back to the double take, when I see an X zone and there's price disparity, I'm like, whoa, something's amiss here. So that's what I was getting at in that. But you're right, an X zone, yeah, you don't have to take insurance. And listen, we know the insurance market, not just flood, but homeowners, is very difficult. Had the conversation with, for those of you who know Todd Tooley, I had lunch with him the other day, and it's like, you know, it's going to affect what you can buy. I hear you, right? Your client might not be able to afford, because of the insurance, what they thought, because they're going to have to build in, you know, what the price is monthly on the insurance side, because it's so high. I'm just saying, better to be safe than sorry. Have the conversation, know the facts, do the homework, and then be able to advise accordingly. Okay.
Okay. Thank you very much.
Thank you. Great question. This is exactly what we want to know and hear from you, everybody.
Okay. So the next question is, I think it's asking whether if every flood policy will renew on April 1st in the entire country. A person who asked this question had mentioned that they closed on their home early March a few years ago. So would that flood insurance renew be in March each year?
Yeah. So our understanding is April 1st is when all the renewals will start to renew, right? So that's the opening day of the renewal cycle. And so it will, from our estimation, Erica, help me out here, it would be whatever your renewal date, you'll start to see it. Is that correct?
Yeah, so your example of March, you're before that cutoff date. So it's just a cutoff date. So it's not changing your renewal date, if that makes any sense. That's just when the pricing starts taking effect for the renewals. So you actually luck out being March.
Get the full benefit, yeah. Okay.
Okay, and then another question asking, if I sell my waterfront home in an AE zone, the buyer can get my policy at my April 1st rate only to increase 18% each year?
Erica, you want to handle that one?
Yes, that's correct. So there's actually a form, and I was trying to see if I could drop it into the chat, but I might be able to do it in a minute. But it's actually a form from the NFIP, and it specifically is a flood policy assignment. So exactly in your example, if you're trying to get a deal done and you're locked in with pre-rate increase, it can make sense to transfer that policy. You can even work out something at closing where, like, maybe they pay you a prorated portion or something back. There's a lot of things you can do, but yes, and I definitely recommend doing that with how crazy everything is right now. Yeah. And we can help you with that. So if you do have one of those, we can get you the form and for your buyer.
Erica, maybe just send it to Ed and we'll put it in the follow-up package so everyone has it.
Okay, perfect. I'll do that.
Yeah, because sometimes the technology doesn't play nicely on Zoom.
Yeah.
Okay, great. Thank you.
One more question in the chat I have, if the elevation is already baked into the premiums, how can we elevate, how could an elevation certificate help?
Great question. And I'll take the first part of it and Erica can jump in as well. So there's a couple of ways that you can dig further into insurance, right? So first, I would say, whether it's Erica or somebody else who you work with closely, make sure you get to a bindable quote, right? That's get beyond this quick directional quote, get to specifics, right? Total cost of ownership. If you're still unhappy with the pricing, like I mentioned earlier, whether it's an elevation certificate or spending $30 on a My Flood Status report, that will be a final flood zone determination exacting to what the elevation is and what it should be. The government in all of this, specifically the government, knows that they're working through a lot of kinks in the new risk rating 2.0, and they have communicated that they're open to looking at specific issues. So it's worth pursuing it to that extent because it might be savings. And I'll turn it over to Erica and make sure that I'm correct in this, and also any other things that you've seen from people who are doing this right now.
Yeah, so I've been doing insurance for 13 years, and this is every day we do quotes on our team that are just so all over the place, kind of like what Jason showed, where the NFIP is showing $1,500, and then some of our private markets are showing $500. So we are selling a lot of private flood right now. And the flood zones, it's been really hard to train myself and my staff to think a little differently about this. It's individual risk rating. It's not, you're in this zone. And I know the mortgage brokers and they still look at it that way, but the rating does not. So, I would definitely encourage you, reach out to my team, or if you are working with another insurance agency, and just quote these out, because you might even see that in some of the cases where beyond floods, the private market that you see on CartoFront's rate sheet, they're not the only private flood market out there. So I have some other ones that I work with that sometimes are lower. It's really just,
Right.
I used to be able to, off the top of my head, tell someone, it'll probably be about this amount. I just can't do that anymore. And it's very, very confusing for everyone seeing these rates all over the place. So,
Yeah.
there's a lot of room for research on them as well. And I've even seen some where the elevation certificate hasn't helped. Each one's just so different now that, it's worth reaching out to an insurance agent to go through it and make sure that it gets shopped thoroughly.
Yeah. I mean, Erica's right. I mean, the government's gone from and again, a lot of people have government coverage. They've gone from just a basic straight chart to now everything's individual. And so with that, and I don't know who asked the question, I want to make sure we're addressing it. With that, now everything becomes, when you've seen one, right? Everyone's individual. Every case is now individual. And that's why there's a lot of confusion, not just for us as realtors on the front side, but the insurance side, as Erica was just saying, a lot of education going on and getting up to speed in real time. And it's going to be a lot of learnings. Okay. Ed, back to you.
If I'm not mistaken, I think this is the last question, but it says, we just checked an agent address. Your quote was, when we clicked on the MLS, $3,076 a year, but we checked with Allstate, and it is $549 per year. So I'm not sure if there's a question or just wanted
Okay,
to share the quote.
If you could give us the MLS number, or I would love to just look at it with Erica. Again, we're quoting the government, and we're quoting one private insurer. Now, again, National General, even though it's part of Allstate, is a separate part of the Allstate team, right? So they're pricing it different than what Allstate might see it. But Allstate is what you call a write your own, just like State Farm and some of the others. So they should be representing the government, right? Their pricing should be FEMA. So we want to dig into that. Who asked that question, please? Are you still on?
Shamra?
Okay, but let's dig into that address team and find out what's going on, and we can learn a little bit more about that. Because I want to make sure that we're clear on that one, because that one should be representing FEMA. And I'd like to know if that was quoted like in the last couple of days, or if that was an old quote. Because if that was pre-risk rating 2.0, that would make sense, right? Then that would be the standard. It's on an X zone. But the new pricing would be reflective of whatever the risk is, whether it's government or private. Is that person still on the line right now, or did they jump off?
I don't
We
see
lost
her on the line.
Okay, all right.
They've jumped off.
Okay, so let's open it up. If you want to unmute and ask questions, and we've got about 7 minutes. We'll certainly go over if need be, but it's your forum. We want to be able to provide as much help to you as we can.
So I have a question if no one else is going to ask one.
Fire away. This is Elizabeth.
Yes, it is.
Hi.
So I was driving for the first half of this, so I just want to clarify if I heard correctly. If you're in a flood zone X, they aren't redistricting them to AEs or anything like that. But if you're in an X, your rates will go up. It won't be that standard 600 anymore. Or is that
Okay. So great question. So they might go up, they might go down. 80% of all quotes are going to go up, right? There's the off chance it's going to go down. Most of those are quite frankly not in your market, right? Most of those are like in Iowa or up on a hill or something where someone's paying 600, but have been subsidizing those that are higher risk. It's just how they're redistricting. To your point though, they're not redistricting I mean, the flood maps are still the flood maps. They're just pricing each property now by what the risk is. And the flood map is included in it. And my thesis on the 3 different quotes that we're seeing is, if it's an X zone, one of 2 possibilities are coming out. One is there is low risk, and both the government and the private market seeing it as low risk and pricing it as such, which is great. That's confirming, and that's nice to see that it may not be $600, but it's going to be $700 or $500, or it's going to be somewhere around what the standard pricing used to be. That's comforting to know, and both the government and the private side seeing it the same way. The ones that are concerning are what we call the double take, where it's an X zone, but one of the 2 parties, the government or private, is seeing risk and pricing it as such. Those are the ones that need a lot of homework. Those are the ones that are keeping us up at night. And those are the ones that you got to just double down and dig in and understand what the true risk is, because someone's seeing and someone's not.
Okay. And the 80/20 is for all zones, not just the X.
Every price is going to, 80, right, is all zones.
Gotcha.
Right. So
Perfect.
like we're seeing in some places outside of your area, huge jumps. I mean, we're seeing, and we don't know your area well enough, but we like in parts of Miami, we're seeing huge jumps. I mean, like unaffordable jumps. Like, I'm not sure. I mean, we're going to see it in your market too, honestly. I hate to say it.
Right.
It's just the government's getting out of the subsidy game, and that's really the thesis. And it's going to make it tougher for those people who want property with risk to afford it, unless they have the wherewithal that they can afford it and just they don't care. But to someone else's point earlier, if you're working with somebody who's on a budget, and has to manage it, they might have to buy a little bit smaller of a property if they fall in love with something that's on a flood zone, and we know there's no inventory. So people they're opening up their view of what they're willing to look at, because there's just nothing out, and they want to be in a house that badly that they're willing to take things that have a little bit more risk that they wouldn't if it was a slower market. And with that, then they might have to buy flood insurance, and thus they may not be able to afford as much as they want to. It's a conundrum, and, you know, and it might slow down the market, unfortunately, just as the reality of it. Other questions? Has this been helpful for everybody? I mean, I want to make sure, you know, if there's something we can do to, you know, make the training more improved, better, you know, in the next couple of weeks for other clients, for other people that are in your agencies or what have you. I mean, please let us know. Thank you, Mark, for the thumbs up.
I think a couple more questions have come in on
Great.
the chat.
Okay,
We have
great.
two.
Awesome.
The first one is, if a client has already closed on a condo and did not transfer seller's policy, I don't know if there was one, truthfully. They have been renovating since last summer. They are now in the situation of paying the new rates as if they purchased the property after October 1st, 2022, correct?
Erica, how do you?
Yeah, that would be correct. Let's see, they closed on the condo.
And didn't
Was it
transfer.
this past summer?
Who asked the question? If you can take
Okay,
off mute.
yeah, sorry.
Kimberly,
Okay, well,
let's have
so
yeah.
it is, let's see, yeah, so the way the form reads is that the flood policy assignment has to be received on or before the closing date and received within 90 days of, or I'm sorry, 30 days of closing. So you wouldn't be able to assume the policy after the fact in that case, unfortunately. And yeah, the rates, but they're in a case where it could be shopped around though, because there are so many private flood markets now. So, you know, if they're getting a crazy expensive rate, we might be able to find something for them that's less, or, you know, even some of them you can remove some coverages just to give them a little peace of mind without being so insanely expensive. And did that answer your question, Kimberly? Great. And then I think Fred was asking the max $12,125. Yeah, that is going to be the maximum premium for the NFIP flood policies.
Regardless of property value, regardless of location, everything, right? So that is the top line, right? Yeah. So again, and that's for $250,000 worth of coverage though, right? So you want to talk for a second about excess then? So say the property's worth, you know, let's say it's worth $1 million, right? So let's just talk about excess for a second. This is actually kind of a different angle, but let's talk about that for a sec.
Yeah, so regarding, you know, this has been kind of interesting as well, because when I first started doing insurance, really everything we sold was through the NFIP. So it was 250,000. That's how everyone thought about flood. Like that's all you can get. And now all these private flood markets have come out, and there's the ability to insure for replacement cost of the home and not just 250,000. I mean, I'm sure, you know, in your market, 250,000 doesn't go a long way for a lot of the homes in your area. That's just, you know, very low in the Florida market at this point. So with these private flood markets, you have the ability to do excess flood on top of the NFIP. So, you know, if the NFIP was 250,000, their rate was really low, you could still buy that. And then you can actually purchase more coverage. So, you know, if the home's a $700,000 home, you could insure up to that amount gap coverage from the NFIP, but you can also just insure it on one policy, you know, with the Beyond Floods through NatGen, some of our other private flood markets. Beyond Floods, you can insure up to 1.5 million in coverage, which is great. And there's also on these private flood markets, there can be more bells and whistles and things on the policy. So that's an important thing as well. So for example, outbuildings, some of the flood policies, you can endorse pool coverage and things that the NFIP flood government flood option just doesn't have a market for. So it's scary how all this is going a little bit with the pricing, but it's also kind of a good thing that it's created some competition in the marketplace
Right.
and more options.
Right. So two things. One is, Erica, but at a minimum, if someone is on a flood zone, or just wants to take a policy, all they need to do is have a minimum, 250, 100, right? They just have to show that at a closing, right? They just have to have some insurance. They may not have to insure for total replacement costs, but they have to come to the closing
Exactly.
on an AE, VE, AH, that they have insurance, right? At the minimum, right?
Exactly.
Okay.
And even in some cases, the mortgage companies will let us exclude the contents because they don't really care if
Right.
your furnishings
That's
are
your
covered, so.
issue, right? That your personal content. Yeah, I just saw a quote like that from that someone shared with me. Net Gen would be, if it was a car, I've said it's like Toyota, right? It's maybe not the least expensive, but the value is there, right? Would that be a fair assessment?
Absolutely. Yeah.
Okay.
We write a lot through Beyond Floods. They're comprehensive, have a lot of coverage options, and they're competitive. But as I said, if you're seeing something where the rates are really crazy, just reach out to us, because like Jason was saying, sometimes it's just flat out wrong, or needs some attention to research, and we might be able to get a review in process for it. But some of it just is what it is, unfortunately, with the rates as well.
Another question just came in here.
Yes, I know it's already 4 past the hour, but there was one more question I was asking. Can you add a rider at any point during the coverage?
Teresa, are you talking about like adding additional coverages, or is that what you mean by that?
Yes, like you were mentioning that you can cover things, like pools and whatnot after the point.
Yeah, so the only thing is, with a lot of these flood policies, there's waiting periods on certain things. So I could get you details on how each company does it. I would just, recommend asking. Some of the companies won't let you. So that's the other thing with this private flood. Different companies have different rules and different
rules,
waiting
right.
periods. And, ultimately they're not going to want you to endorse pool coverage when there's a hurricane out in the in the Gulf. So on a case-by-case basis, we can definitely look at those for you.
Yeah, and I think we're going to be walking into hurricane season in a couple of months. This is important with Jeff and the leadership at the association to get this seeded in now, right ahead of both April 1, when FEMA starts releasing their renewals, and then the hurricane season starting around, Memorial Day, although it's coming sooner and sooner, and being ahead of the curve here, with all of you. We encourage we love the dialogue. Listen, this has been really helpful today. We've had calls and emails from your fellow realtors each and every day this week. Please, feel free to, if something comes to mind, questions, info@cartofront.com on our side, and then we'll share Erica's contact stuff, or just get to her through the form on the platform itself. We're here to help support you and make you the best that you can be and the most profitable that you can be. So thank you for everybody's time today. We're grateful for it, and we look forward to seeing you in the market. Thank you, everybody. Bye-bye.
Thank you, everyone.
Thank you. Bye-bye.